Welcome to Banking on Experience, the one-stop shop for all your financial services tips and tricks, the future of business and the future of the customer. Here is your host from CRM Next.
Hello, I'm Marla Fields, and today's topic is transforming banks and credit unions through digital growth with our guest, James Robert Lay, one of the world's leading digital marketing authors, speakers, and advisors for financial brands. James Robert is the author of the now best-selling book, Banking on Digital Growth. He's also the founder and CEO of the Digital Growth Institute, where he's guided more than 520 financial brands on a mission to simplify digital marketing and sales strategies that empower banks and credit unions to generate 10 times more loans and deposits. Welcome, James Robert.
It's good to be here, Marla. Thank you for having me.
You bet. We're thrilled to have you. I know you're a busy man, and congratulations on your best-selling book.
Thank you.
Since most of the writing for this book happened during the pre-COVID world, because it was recently published, have any of the learnings changed in our new normal? And what shifts are smart banks making to come out ahead on the other side of this pandemic?
I would say the learnings are actually more relevant and more applicable now in this post-COVID world, because COVID was a forcing function. When I wrote this book, or started writing this book back in May of 2019, I was like, this is going to be an important work. But whenever we finished it in January, and then we had COVID just starting to come out over in the Asian market, and then Europe, and then the United States, I said, this has to get out, because we hit the pause button on publishing just for a little bit. And my publisher was like, you have to get this out. The people need this insight. And I think a lot of this was, why has this not been accepted or adopted at the executive level? Is the simple question of why change when things are good? It's been good since, 2000, since we came out of the financial services crisis of 2008. Life was pretty good. Why do we need to change? Well, COVID is the wrecking ball that has come through this industry.
Right. Yeah, definitely. Nothing like necessity to speed up the timeline, right?
That's exactly right.
So in your book, you have two great examples of what you call purpose-driven brands, and that's Tom's Organic Toothpaste and Bombas Socks. And I'm wondering if you can explain, why are these purpose-driven brands, and why is achieving that so critical for all businesses?
Well, if we look at the examples shared in the book, the products are commoditized. Every single vertical now, thanks to digital, thanks to even Google, has been commoditized. Banking has been commoditized. Banking is a commodity. We have checking accounts, we have loans, we have investments, and that's really about it. And so the whole perspective of purpose and building a brand around a purpose is that it elevates the brand above commoditization. I'm so encouraged, and this has been a personal area of study for me, is that its purpose is finally getting some play at big firms like McKinsey and Bain and BCG and Forrester, as they're starting to elevate the conversation in the C-suite at even a global level, beyond the idea that a business is in business just for profits. Profit can come and even be exponentially multiplied when profits follow a purpose.
Right. So there are impacts that are both internal and external to being a purpose-driven business. And that's great that you're seeing it now in the financial sector as well.
Absolutely. You talk about the internal impact and the external impact, because we have our internal stakeholders, our team members, our employees. And when we look at digital growth and digital transformation, we're asking people to do a lot of change. And that's very, very hard. Change is hard. And the more empathetic we can be to that, specifically if we define a purpose greater than ourselves. And really, when I talk about purpose, it's defining a purpose statement, which is an externally facing statement that creates value for those that we're looking to do business with. That becomes the North Star of the organization, so that when things do get hard, we can fall back on our purpose as really the way to press on through some of the dips and through some of the valleys.
So in your book, you also discuss what you call digital darwinism and how coasting is deadly for financial brands. So I have to ask, How many financial institutions do you think will disappear in the next 5 to 10 years? And what can banks do about it now to ensure that they aren't one of them?
Well, let's look outside at the retail apocalypse. It's claiming traditional retail brands. And it's funny when you look back, we used to use examples like Blockbuster and Kodak. Mm-hmm. And now what do we see on the chopping block? Neiman Marcus, JCPenney. Even I have a tendency to think that Best Buy might come sooner rather than later. Mm-hmm. And so when it comes to financial brands, what are we looking at from the sickle of death coming through the industry? How many will disappear? I don't think they'll disappear, that they'll just go out of business. We're going to see a lot of mergers. We're going to see a lot of acquisitions.
Right.
Even from the fintech place, I think you'll see traditional financial brands acquiring fintech. But what do we do to ensure that the majority of them, because I think if we lose financial brands, particularly community institutions, community banks, credit unions, we as the consumers lose. Community institutions are the backbone of the local economy. And what do? We have to diagnose the situation first. We have to create space and time to review what we've done, to learn new insights, to gain clarity into opportunities, to think about that, how it applies to our unique situation so that we can do even better going forward. So many are stuck in the cycle of doing digital and dabbling in digital.
Right. Not moving fast enough, or not having it really be a part of the whole organization, and just kind of
siloed.
Yep. Well, I'm wondering, what are some of the biggest mistakes you see banks and credit unions making as they try to adapt to changing customer and member expectations?
I think one of the very first ones that I'm seeing kind of in this post-COVID world, and once again, it's human nature. We tend to focus inward when things get tough. We pull in. But I'm finding that for those that have the courage to lean out and lean into some of the fears, those are the ones that are making some pretty exponential progress in a relatively short 3 months. What would have taken 5 years for them to do something, they've done in 3 months because they've had to. But I think one of the other mistakes, we addressed this before, it comes back to lacking a sense of purpose or lacking a purpose statement, because the traditional mission and vision statements are so archaic. They're rooted in the 1950s, 60s, 70s, maybe even 80s, and some haven't really changed much since that time. And then that doesn't lead to the desire to transform. Once again, why do something? Why make a change when we're doing things well? Because the desire to change has to be greater than the desire to remain the same. I think the other perspective is, let's turn outwards. Let's focus on solving people's problems. Let's become empathetic leaders, both internally and externally, and really guide people beyond the financial stress that they're stuck in today towards a bigger, better, brighter future.
Yeah. And are there technologies that you think would be helpful for banks and credit unions, to, especially the regional banks and credit unions, to be able to compete with those big banks and the new players in the financial space?
Absolutely. And I think, once again, it's reframing and reshaping the conversation about technology. What is technology? Technology is nothing more than a tool that brings two people together to create value. And when I look at technology, I'm looking at framing technology around the digital consumer journey, how people shop, how people buy, how we can guide them along that path. And there's really, I would say, 4 or 5 key technologies at a very, very high level. Number one, you have to have a website that sells. Transform the glorified online brochure into a revenue-generating engine. But a website that sells alone won't work. You need marketing automation to nurture leads that come in from the website. Once we nurture those leads, we convert those leads, kind of like with what you guys are doing. We need a CRM for 2 angles, sales and for service. And then we need mobile banking, not just mobile banking, but mobile banking with video capabilities, because this is about bringing people together. It's about humanizing the digital experience. And then finally, one of the greatest untapped opportunities that I see for financial brands is building digital referrals into the process, into the system, into the journey, because people still trust people more than they do a brand.
Excellent. Yeah. Why is that digital consumer journey mapping that you talked about? Why is that one of the most essential strategies to maximize the future digital growth potential for a bank or credit union?
This is really about an exercise in empathy. And when we look at this idea of technology being a tool that brings two people together for good to create value, I see empathy, or EQ, as a strategic competitive advantage for a financial brand today. EQ is in my opinion, going to be far greater than IQ. And when we look at digital consumer journey mapping, it allows us to view the entire journey from the eyes of the consumer, which can be distilled down to 5 stages: awareness, consideration, purchase, adoption, and advocacy. But I think that's too simplistic. The consumer journey is made up of micro moments, and they happen at different times, at different pacing. And when we do this consumer journey mapping exercise, it allows us to identify gaps in the buying journey first, and then we can prioritize the action steps that need to happen second to bridge those gaps.
Right. And you talk about simplification a lot. It's a common theme in your book. I really love the way you simplified technology as just a tool to bring two humans together. Mm-hmm. But why do you think people fear automation, and should they?
Let's come back to the human condition of fear. There's 4 types of fears: and the unknown. There's fear of change, there's fear of failure, there's fear of success. And I think when it comes to this idea of automation in the age of AI, it's the fear of the unknown. We've never lived in a time like this. We're moving into the 4th industrial revolution, and it's scary. It's scary to think of, oh my gosh, the robots are going to take over. And maybe it's just because I look at the world through a growth mindset, and I look for opportunities where AI, automation, it gives us the ability to offload, or quote unquote outsource, the mundane task, the repetitive task. Because what does that give us? It gives us, as a financial brand, the ability to focus more on the relationship with people. It gives us the time to provide coaching, to provide guidance, which in my opinion is the next step in financial services. If we're really wanting someone to transform their financial life, to help them get beyond stress, to help them get to a bigger, better, brighter future, products and services alone won't do it. Those are the tools. Once again, it's the coaching, the guidance, the accountability. And I think the other thing when it comes to the fear of the technology, my hypothesis is people are going to be more accountable to make behavior modifications for whatever the situation might be when they're held accountable by another human being and not by a robot.
Yeah, but I can definitely understand that people are afraid that they'll be replaced, and that's really not what it's about. It's about helping them do better and freeing up their time and making them more efficient and so on.
Reskill, upskill is probably one of the greatest opportunities going forward, is just showing people, giving them clarity that this is not intended to replace you. This is to help you do what you do even that much better.
Right. So you mentioned CRM, and of course, as CRM Next, I have to ask, you talked about in your book that CRM is the core of any sales and service enablement strategy deployment. And I'm wondering, what do people tend to get wrong when they view CRM's value?
I think there's a lack of clarity, and that lack of clarity leads to a lack of understanding. That lack of understanding leads to a lack of adoption. Once again, let's talk about change management and changing employee behavior of utilizing a tool like CRM. Whenever you show someone what the opportunities are, CRM can become the central source of truth for a financial brand. And really, we take all of this data and we put it into one platform. But data alone is nothing more than just ones and zeros. There has to be the ability to turn that data into analytics, turn the analytics into insight into action. And so where we've gone wrong with this is traditionally the legacy view of CRM was this is a cost. And it's a cost because of low adoption, because of friction, because of frustration. And really the idea of like the vernacular of CRM, what does it speak? Customer relationship management. And when we think about management, management is looking and managing in the present moment. I'm really looking at CRM as a growth multiplier. And what I mean by that is CRM is not about just customer relationship management alone. It's about customer relationship multiplying.
I love that. A new word for the M in CRM. Perfect. And I absolutely agree. It's not really a cost. It's actually a savings and a way for you to drive new growth and also deliver on experience at the same time.
Absolutely. It's an investment into the future, not from a technology standpoint. It's an investment into future relationships, which will yield future growth.
So you also described SunTrust's On Up program as an example of successful storytelling. Tell us a little bit about why storytelling matters.
Well, if we go back to our 9th grade literature classes, one of the greatest lessons, and I never thought that this would apply in my professional life 25 years later, one of the things that we've all learned is that there can only be two heroes in a narrative structure. There can be the protagonist, and then there can be the antagonist. So we have the hero and the anti-hero. And traditionally, financial brands love to think about themselves and talk about themselves and market themselves as the hero. They're going to come in and save the world. But what happens when we view ourselves as the hero is when the consumer receives that communication, receives that messaging, an alert goes up. Because in the eyes and the minds and the hearts of consumers, they're like, no, I'm the hero. And so enter the anti-hero. So there's already conflict with that type of positioning. So the opportunity here is to transform the way we think about ourselves as financial brands as not the hero, but really an even more important role in the stories we tell. And that is of the helpful and empathetic guide. Yeah. Because without a guide, there can be no hero. Think about it. Without Yoda, there could be no Luke Skywalker. That means there's no Star Wars. Without Mr. Miyagi, Daniel's son would have never transformed himself, and he would have always gotten beat up by Johnny and the Cobra Kai. So really the guide, the helpful and empathetic guide, is what makes a great story. And if we think about ourselves as that, it transforms the entire perspective of how we view ourselves internally and how we communicate ourselves externally as financial brands.
That's great. I'll definitely be thinking about Star Wars in a different light now. So appreciate those examples. But certainly we want to get to be guides in the financial health of all the members and customers. And I think that's the right way to approach it.
Absolutely.
But I'm wondering, what are the key metrics to track and improve digital growth?
One of the things we have to do is go beyond reporting and really even accepting vanity metrics. I just recently had this conversation with a VP of marketing who has been receiving vanity metrics like clicks and cost per thousand and audience reach from their digital agency. And I'm not saying that those metrics are bad. They're helpful. They're like the altimeter on a plane. It's a leading indicator of whether we're going up or whether we're going down. Yeah. But we have to start with the end in mind. And what I mean by that is, what is the lifetime value of an account holder, and looking at that for every single product line? Or what is the net interest income, the average net interest income for a loan product? Because from there, we can start with the end in mind and back in. And really key performance metrics, I believe, need to be mapped to the different stages of the buying journey. Top of the funnel, we have our traffic KPMs, like once again, cost per thousand, cost per click. If we're getting into the mid-level of the funnel, we have, what does our marketing qualified lead flow look like? What is our sales qualified lead flow? What is our sales qualified prospects? But then even going deeper into that, applied apps. So now we get a cost per application, abandoned applications. Abandoned applications to me is one of the biggest pain points when it comes to digital growth, because we see 85 to 92% of digital or online mobile applications being abandoned. That's like a digital retailer having a shopping cart that can't convert. To me, it's also one of the quickest wins a financial brand can gain, because we know that these people have started the process. We know that there's intent, but because of friction on the application or confusion, they've left, and we don't know if they're ever going to come back. And so if we can fix that problem, we don't have to do anything else. Top of the funnel, no new ads, no new emails. We fix that problem. We're going to make progress along that journey. So to me, that's a really good place to start when looking at metrics.
Yeah, absolutely. Over 90% of mobile apps are abandoned. That's really amazing. What is the best way to fix that? Do you think it's looking at the process for filling that out, or is it more doing the follow-up in person to help them along?
I think it's twofold. I think it's really having the hard conversations on the UI, the user experience of the application process. What can we take out? What do we really not need to have, or what do we not need to ask? Or how can we transform the visual communication of that and simplify it and distill that down? Because the only way to escape complexity is through a journey of simplicity. And that means to get rid and shed a lot of data, of information, of perspective from the past. A lot of times, though, that's going to be more challenging. It's not as easy. It's easier said than done. So to me, the way to solve that problem is by capturing some very basic information, a name, an email address, a phone number, before sending them off to a third party loan app or deposit app. Because when we capture that basic information, we can flip that over to a digital sales team that they can then do some outbound calling around if someone doesn't complete that application.
Right. Great. Well, it's been wonderful talking with you today, and we're kind of at that point where we have our signature question. So I'm wondering, James Robert, if you have an example of a company that made you feel more like family than a customer.
Absolutely. Four Seasons.
Four Seasons.
And learning a lot from the perspective of the founder, Issy Sharp. He had a saying, to systemize the predictable so that we can humanize the exceptional. And after staying at multiple Four Seasons properties around the world, I got to tell you, it is one that is my family has enjoyed, I've enjoyed, and they've always have taken care of us because of the perspective that they do take on humanizing just such an exceptional experience.
And it sounds like you're a loyal customer because of it.
Very much so.
Well, thank you again. And congratulations on Banking on Digital Growth, which is not only a best-selling book, but one that I really enjoyed, was very eye-opening for me. So definitely encourage all the listeners out there to pick up a copy and read it. And thank you so much for all of your insights today, James Robert Lay.
Thanks for listening to another episode of Banking on Experience. Remember to tune in each week and subscribe, where we aim to simplify work, drive growth, and deliver on experience.